Welcome to SB Talks. Today is Monday, June 30th, and I am joined as ever by our Chief Investment Officer, Nick Ryder. Welcome, Nick.
Thank you, Vinny.
Now today, Nick and I will be discussing the latest geopolitical picture in the Middle East, developments on Trump's One Big Beautiful Bill and Section 899 revenge tax, as well as a look back at market returns over the financial year. Welcome to all our listeners. Let's start with a bridge to the last recording. When we last sat down, the Israeli airstrikes and Iranian rocket attacks were fairly fresh in the memory, and speculation was high on whether the US would enter the fray. And obviously with fears that may see a broader escalation in the situation. Now, ultimately they did. But as we sit now, it's probably fair to say that we've seen a de-escalation. Obviously, hopefully that lasts. How do you read things?
Yeah, I think, well, I guess I'm optimistic that the current ceasefire between Israel and Iran will hold. And certainly we haven't really seen much over the last week to suggest otherwise. I think the Iran's sort of soft response to the US attack with a telegraphed missile attack at Qatar Air Base was sort of their way of sort of putting a bookend to it.
Having seemed to have a reaction.
Yeah. I mean, I think there's still a risk that they might do something covertly, like attempt to sabotage maybe some the shipping through the Straits of Hormuz, or there's also using their proxies and allies in the region to do some sort of terrorist attack. But
let's talk quickly to the Straits of Hormuz, because that was probably, I think, economically considered to be one of the more significant potential threats out of all this. And why might they be reluctant to do that?
Yeah, I mean, so that was one thing that I guess the oil market was worried about, and that's why we saw the spike in the oil prices, because 20% of the world's oil and gas exports travel through this 33-kilometre strait. So
that's not
choke point.
So Iran are themselves exporting through there, but also a number of their other Gulf neighbours.
Yeah, so there's three reasons why they didn't ultimately choose to shut it, even though their parliament voted to do so.
Right.
One was that they themselves rely on it, shipping their oil to China mainly through the Straits, so they'd be committing sort of economic suicide if they shut it down. The second thing is it would annoy all their neighbours, their Gulf Cooperation Council and Oman, who are major exporters and send a lot of their oil through the Straits. So I'm sure they don't really necessarily want to annoy all their regional neighbours. Some of them are sort of semi-allies, or not necessarily allies, but certainly in between sort of negotiating between the US and Iran. So
a potential bridge to the other side.
Yes.
Yeah.
And the third thing was that the US Fifth Fleet is based in Bahrain, and they were certainly ready to sort of step in to ensure that shipping was able to continue. Iran doesn't have a very powerful navy, and so if they went up against the US Navy, then they would have probably suffered severe
pretty dramatic consequences.
So I think all those things meant that they ultimately haven't chosen to do it deliberately, but that's not to say they couldn't jam radar or GPS. They couldn't send little drones and things, and then deny it. So that's always a risk.
And we know modern warfare is increasingly fought at that level.
Yeah.
But we have the benefit now of over a week since the US strikes, and the markets and the commodity market and the equity markets have been incredibly relaxed.
Yeah, so oil's basically back to where it was pre-Israel launching their attack, $67 a barrel roughly for Brent crude. The US equity markets made a fresh record high on Friday. It was up 3.4% over the week. So it's about 1% above its 19 February peak. So yeah, as you say, nothing to see here.
I was going to say, if you'd left the country and switched off all social media and then come back and gone, oh well, it's a bit of a flat period there. Not much happened, and just a few tariff announcements.
I think that there's still
geopolitical.
I think there's still a big question mark over whether they actually did destroy all of Iran's nuclear facilities, particularly the highly enriched uranium stockpile, where no one's really quite sure where that is. So there's still, I guess, Donald Trump has said he would go back if necessary. So I guess there's, it's a sort of not necessarily done and dusted. So we'll just have to keep an eye on it.
There's that overhang and that leverage, but it does sort of see the geopolitics sort of dampen down from where the level we've been at over the last few weeks. In the last week in itself, we had another NATO meeting, and Trump continuing his call for their allies to not lean so heavy on the US, and basically got a commitment, I think, from all the major partners, bar Spain, to a 5% budget allocation to defense spending.
Yeah, so the NATO agreed to lift defence spending from around 2%, give or take, depending on which country you're talking about, to about 5%. So that's 3.5% direct defence spending, and then another 1.5% on things like cyber defence and infrastructure and other things. So that's 5% over the next 10 years. So it's quite a big step up in defence spending. And I think Donald Trump was also a bit more, shall we say, supportive of NATO at that meeting. He didn't say that the US wouldn't abide by Article 5, which is that mutual defence pact. So I think that it was a good outcome for NATO from that regard.
Almost international leader harmony there for a few days.
Yes.
Will not make any reference to the talks of Daddy.
That's right.
One of your hot buttons the last time we spoke was the One Big Beautiful Bill, and particularly the Section 899 revenge tax risks in that. We've had a few developments on that front in recent days.
Yeah, so over the weekend, Treasury Secretary Scott Bessent has asked the Senate to remove Section 899 from the Senate version of the bill. So that's good. They seem to have some sort of agreement with G7 countries about exempting the US from the 2021 International Minimum Tax Agreement. There's still... So that's very positive. And that
goes all the way through?
Yeah, if that goes all the way through. There is still a question mark. For example, over the weekend, Donald Trump said that he was stopping negotiations with Canada over their egregious digital services tax. So the trade negotiations have sort of, gone on hold.
Excuse my ignorance, but what does the Canadian digital services tax look like, and how much is it similar or different to some of the policies we have in this country?
I'm not 100% on it. I think it's similar to the ones that we have in Australia. It's called the Netflix tax. Yeah. Theirs is actually retrospective. It goes back to 2022. So companies are going to be hit, I think it's this week, with huge tax bills going back on their digital services revenue for the last few years. So that's, I think, why he's referred to it as being egregious. So
all his friends that showed up to the inauguration have quickly got on the phone and said, hey, can you do something about this?
That's it. That's it. So, that's a bit of a dampener. But in terms of some of the other trade agreements, it's reported that India, Japan and the European Commission are fairly close. And China and the US put some more details about the rare earth minerals exports, which have been beneficial. And Scott Bessent said, maybe not 9th of July as the deadline, maybe Labor Day, which is the 1st of September. So a bit of a pushback.
I was going to ask that question because a lot of the Liberation Day tariffs had this sort of pushback to 9 July deadline, and we're not far off that at all.
That's
so
right.
That date looks like it's going to get a kick down the road.
That's it. In terms of the One Big Beautiful Bill, that's currently being debated as we speak in the US Senate. They're madly trying to get it done before 4th of July, a holiday, on Friday. So apparently it'll go down to the wire to try and, because then it also has to go back from the Senate to the House. And they've got very narrow majorities, Republicans in both houses.
I take it then Trump wants this to be a celebration on the 4th of July of his
sounds like
big, beautiful bill. And we probably don't need to go into the extreme details of it, but I guess step back from some of those nastier or more dangerous elements. This bill is still just a huge degree of spending imposed on their budget.
Well, that's right. I mean, as part of the bill, they're asking to lift the debt ceiling by another $5 trillion. So that's, I can't remember exactly how much this adds to the deficit over the next 10 years. Different estimates around that $3.5 to $4 trillion. So a substantial increase in US government debt, as far as the eye can see.
Now, when you've got that much debt, you're going to really care about what level of interest that you're paying on it. And we've had a few verbal volleys come across from the White House across to the Federal Reserve and in the direction of Jay Powell. Do you want to share with us, I guess, the broader context of what's playing out there?
Yeah, I think that's it's we've spoken about it before, this sort of trying to bully the Fed into lowering short-term interest rates. And there's even been talk in the last week, there was a Wall Street Journal article about Trump potentially bringing forward the appointment of Powell's successor as Fed chair. His term expires in May of next year. So what's that, 11 months? But if the idea being that if he can appoint a successor, then Powell becomes a lame duck, and that the successor will be kind of the mouthpiece for the Fed even before he's taken
before he
his
formally
seat.
takes the role. Yeah.
So there's been a few names thrown around. It's just a gossip at this stage. There's probably some risks in doing that. So we'll just have to keep an eye on it. But certainly there's a couple of the people put forward, including one who's already on the Fed Open Markets Committee, has started saying, maybe lower rates could come as soon as July. So
boxing their position already.
He's putting his credentials forward through that.
And let's talk a bit about, actually, while we're on this topic, the Fed's position at present, because they are, and we've talked about it previously, recording this dramatically fast-moving policy position. Really too early to tell on a lot of the data, but we are starting to see some data flow through. And, the Fed has very much been adopting a sort of a watch and wait position, which is understandable for most people, obviously not for the president. But where do we sit today on that?
Yeah, so we had Jay Powell give testimony to Congress last week, and he basically reiterated that. He said, we don't know how much tariffs will be passed on to consumers. And we got for example, the May PCE inflation reading last Friday. It was a tad stronger than expected, so 0.2% rise in prices for the month versus 0.1 expected, and annual rate ticked up from 2.6 to 2.7. So that we're not seeing a lot of tariff impact yet. People think it's probably more likely to be in the June reading, so we won't get that for another month or so. So that's sort of giving more ammunition, I guess, to Powell's position that it's too early to make a call, even though Waller, who's on the Fed committee, has said he thinks they'd be in a position to cut in July.
In July.
Yeah, the market hasn't priced that. There's only like 4 basis points priced for a July cut.
How's the market pricing sort of the rest of the calendar year?
The first cut is in September, and then one, a bit more than one, in by December. So 63 basis points priced by December.
It's a question of almost the timing and how aggressively they go on that.
Yeah. But that's the short end of the curve. Obviously, for the US Treasury, they do a lot of their bonds are longer dated bonds, and that's more sensitive to the long end of the yield, so the 10-year or the 5-year, 7-year, things like that. And the Fed doesn't necessarily have a lot of control over that. That's where we've seen this sort of steepening in the yield curve. So even though people think the short rates will come down, they worry about the longer term sustainability of US debt, and so demanding a higher yield for longer.
We talk here about the phenomenal power of the bond market and how it is the one thing that potentially can keep some sort of curb on this administration, and it's just gradually, continuously getting less comfortable with the debt position.
Well, that's right. And if Trump was to put his patsy in as Fed chair, even though the Fed would control the short end of the yield curve, it would be the bond market that would ultimately...
But still have its say.
Still have its say, that's right.
Now we sit here today. It is 30 June. Happy end of financial year, of course. Look back on the last 12 months, a reasonably solid one for markets, despite everything that's gone on.
Yeah. So through to last Friday, ASX is up 13.4% financial year to date. The MSCI World unhedged 18.5%. Global bonds 5.3 and Australian bonds 6.9. So it's been a pretty good year for most asset classes. It's interesting. The US markets recovered 24% off the post-Liberation Day lows.
From only early April, not long ago.
I was reading today, it's the fastest recovery on record between two record highs. So there was the record high on the 19th of February. We then fell more than 15%, and then we're back within 89 days, back above the record high. So for a fall of more than 15%, it's the fastest recovery on record.
It's quite a fast-moving market in all directions. Anything else catching your eye? Anything else you're looking out for?
No, this week we have the ECB's annual central bank conference in Sintra, Portugal.
Will you be going to that?
I won't be going.
Sorry.
But all the who's who of central bankers will be there. So Jay Powell will be there, Mark Bailey from the Bank of England, Ueda from the Bank of Japan, Christine Lagarde from the ECB. So it'll be watched to see whether they, what we can learn, if anything, new on sort of central bank think.
Yeah, I guess central banks will be talking a lot about shifting global trade and uncertainties on that front, no doubt.
Yes, that's right. The word uncertainty will be used a lot.
I can imagine. I can see the word cloud already. Thank you. Thank you, Nick. Happy end of financial year. And thank you to all our listeners.
Thanks.